Honestly, this video is a while in the making and I still don't think I'm ready. But with whatever I know now, I just want to share so that you can use it to your advantage and bring you to the next level, which it has brought me by chance. And I'm just so lucky to be 5 years deep into this before I start talking about it. The time that you begin opening your third eye and see what is going on. A lot of people are afraid of this word third eye, like, oh my god, eye in the middle of my forehead. But the real meaning of what a third eye is just unlifting the veil, which means you see through things that initially you don't. So, for example, if you're character, in a game simulation and you're constantly saying the same lines over and over again. After a while, when you start seeing your own pattern and how you're playing out a character that is scripted, you can't unsee it. Once you wake up from it, it's very difficult for you to go back to sleep. Hi everyone and welcome to today's episode, which is Down the Rabbit Hole. So when I first started, this Skillfully Lucky series, I wanted to talk about all the spiritual side of things on how to get skillfully lucky over and over again in trading and in life. You witness a lot of traders finally becoming profitable when they see the markets in this pattern, when they finally merge that masculine side with the feminine side. At the end of this video, I'll be showing you guys some examples of the recent, happenings of sequential repeating patterns that is found in the market, as above, so below, in the larger time frame, in the smaller time frame. I want to touch on a few principles first, then we'll get into that down the rabbit hole video where everything just, to me, click. For the first point, if you want to know the future, study the past. The market is not random. It is a memory machine. You see, the 2008 crash is in sync with the 2020 crash. I see everything now in years of 4 or like segments of 4 thanks to quarterly theory. Every year there are 4 quarters. In every single month there are also roughly around 4 weeks, 4 full weeks. If you ignore some of the last few days and the beginning of the next few days in some of the months. And this is a whole topic itself for another time because I do believe that we should have 13 months instead of 12. And each month should have the perfect cycle of 4 weeks, which corresponds with the moon cycle as well. And every 4 years, there's an election, right? And then you see from 2008 all the way to 2020, that is a same quarter. So everything repeats itself in the same pattern. Everything you need to know is already in the markets. So history is not just a cycle, it's actually a spiral that constantly repeats itself, going through the same things again and again. And the only people who benefit from it are the people who actually go through the studying of it, and not those who are like, oh, it's in the past already, I'm too good for the past and therefore I don't need to look at it anymore. Another example, we have the dot-com bubble and the 2021 tech hype. So it's the same thing that's going on over and over again, different excuses, but it's just for the markets to react the way that it's supposed to, following the calendar that it's supposed to. So all this news over time, I just stopped paying attention to them. All I want to know is when is there going to be a big news coming out, and I go into the charts and look for the patterns that I already seen happen so many times. It's all printed already there for you. And then when you match it to every month, you have an NFP, every month you have a CPI, you can get to see it for yourself that things are going to happen, right? They just are waiting for time to play out. That's why on every chart you have the price axis and the time axis, and you have to pay attention to both. You have to give weight to both of them. And then point number 2 I want to touch on is as above, so below. You have heard this multiple times from my episodes itself. What happens on a larger time frame is what you will find on the smaller time frame. So if you can find more of these confluences by getting your larger time frame, giving you a bias and an idea of what you're looking for, and then going down into the lower time frame to find the different quarters and how they overlap with the larger time frame, you are more likely to get your trades in the right direction and in the right favor when you just pay attention to markets like this. Started studying Fibonacci and how everything is presented as above, so below in this sequence. The universe language is actually math. And I got deep into the whole of Robert Edward Grant and all that.
You see, sacred geometry is more than shapes. It's actually how the universe thinks. Before anything ever existed, there was just one point, one singularity. And then that point duplicated, and then you've got 2 circles that overlap. Duality, light, matter, vibration, and consciousness. Every shape is like a thought structure. Spirals is how time unfolds. The way your spine curls, the way galaxies spin, it's all the same. Like your DNA and the Milky Way are running the same code. Sacred geometry is kind of like the language in which the universe speaks. And if you learn how to read it, you kind of stop asking for signs, because reality becomes the sign.
And everything is just printed over and over again. And that really got me into this spiritual rabbit hole while I was picking up trading. And little did I know that merging them together is what truly serves me. A lot of times when you read, the books like Trading in the Zone, you'll realize that trading is masculine and the zone is actually feminine. All these people that you're looking up to are all people who are in flow. They're acting even before their mind could react. When you see someone throw a punch and even before you could react, the opponent is already avoiding it. So that they are not even playing out in time anymore. They're playing out before time. They are in the zone where time is catching up with them. And that is where you want to be in all of your decision making. You want to be so in tune with your intuition that time is a lagging indicator. And time is just playing out whatever that is already being anticipated. And time is, to me, is also kind of feminine, she comes and goes when it's time for her to come and go. All right. So if you see all of the successful traders, they have mastered the masculine side of the markets, which is the technical side, knowing what you're doing in the markets, all the technicals, they have mastered it. And then now, for them to truly be successful, they have to master the feminine aspect, which is time. The allowing for things to happen when it's meant to happen. If they rush into the markets, that's it. They're out, they can't profit. To truly master trading, you have to get both of this aspect right, with price, the masculine side, and then time, the waiting, the allowing, the sitting back, and letting things come to you. So the third point that I want to touch on is the universe is sequential. Everything happens in a timeline and the news has already priced it in. How many times have you seen people taking a loss and then they say stuff like, oh yeah, it's because the news, this happened, that's why I took a loss? Well, those people are not prepared, firstly. You shouldn't be trading right before the news, like a gambler, going back to the casino time and time again and telling themselves, this time is different. Back then it was because of this uncontrollable factor that I did not account for, but this time is different. So don't be a gambler in the market. Always prepare yourself. And how to prepare yourself is to study the sequence of things, the sequence of happenings. The market is not reacting to the news, it's actually pre-acting. You can also put in health, wealth, heart, and soul into the feminine aspect of trading. And having that balance coming into your trading and your strategy would make you a much more fuller person who understands who you are outside of the market, so you're not solely reliant your entire identity, your entire avatar on your growth when it comes to trading. So if you're not growing in trading in the ways that you are measuring yourself to be successful, then you're in depression, you don't know who you are anymore. So make sure to put in attention on all the other things that you do outside of trading, because trading is only like 2-3 hours of the day. Who are you outside of that? Are you taking care of self? Are you taking care of your health, wealth, heart and soul, your family, your relationships, and your inner alignment to the higher being? So whenever I talk about all this sequence stuff, Fibonacci, it reminds me of how I am connected to everything else. And it gives me a sense of higher purpose to be sitting down here and recording this video, talking about something that I think I will be better at in 10 years to come. But if you're watching this right now, then this is the version that I have right now, with a lot of conviction that I have, that I know that what I'm doing is giving me a fulfilling life outside of trading. So I hope you find that too. Everything in perfect timing, and whatever you choose to focus on will lead you to where you're meant to go. So there's a lot of acceptance in where you are right now, a lot of appreciation and gratitude for you to watch this video, take the time out to just explore a little rabbit hole when it comes to trading. I hope that this video gives you a bit more curiosity to dig deeper into the happenings of the universe. Whatever that's happening in the world do not have to throw you off, and you can stay grounded and always be the best outcome in every situation. Learn about the feminine aspects of the masculine trading world. You will become successful even before reality catches up with your vibration. See you in the next clip where I show you the little divergence sequence that I found thanks to quarterly theory. All of this Q1 and Q3, right, where they give the SMT is what spark off like big reactions. Hi everyone, so today I want to be talking about a SMT that is non-sequential, and we have been seeing a bit of this pattern coming in to the summertime of the year, right? So now we have the yearly quarter. So you can see at the beginning is January, and then the second quarter comes on the first week of April, and then July, right? So right now we have Q1 and Q3 giving us a pattern. Every year there's 4 quarters, right? So from 1, 2, 3, and 4. And then currently we're seeing a pattern where quarter 1 and quarter 3 are matching themselves up to give us SMT, which is divergence. And usually we look out for sequential SMT, which means it has to be Q1 versus Q2, Q2 versus Q3. But now we are seeing more of a pattern between Q1 and Q3. So this is really fun to just be witnessing. When you have like Q1 versus Q3 or Q2 versus Q3, then when you go down into the lower time frame, you can actually see them playing out again and again. So if it's Q1 versus Q3, you can see in the smaller time frames as well, where they somehow, seek each other out to create the SMT. And that's what's the fun part about this. So let me begin with the yearly. We have the high of this year's quarter 1 here. And then currently we are in quarter 3, and you can see that quarter 3 have already taken out this year's quarter 1, right? Like this. That's on ES, and then this is on NQ. It's also higher. While on YM, which is Dow Jones Top 30 company, we have the high over here, and he has not taken out any of the high from Q1. So Q3's high is still here. Okay, so now let's go down into the smaller time frame. So when you see things like this, right, you want to just go down into the small time frame and be like biased on it, because once you're like getting more and more biased, this is when you see the markets like easier. Okay, so on daily time frame, this is how it looks like. The third week for the Q3 is on its way, which will be happening next week. Right now it's still Friday, 18th July. So the Q3 for this month will only come next week. So next week I'm anticipating something big to happen. And then going down into H4. So you can see that sometimes in a month, after 4 weeks, right, there's this blank week where you have the last few days of the previous month and the beginning few days of this month, creating this blank week. But what I want you guys to see is just this low blank week, Wednesday. And then the next Monday, let me just show you on the weekly. Next Monday actually created a higher low. And then over here, we have Wednesday and then the Monday. Higher low, right? And then on here, YM, we actually have low and then lower low. This itself is SMT. Okay, so this current week, we also have our Monday giving us a low, and then Wednesday giving us a lower low, while Monday giving us a low and then higher low on NQ, and then lastly low and lower low on YM. And then now let's go down into even smaller time frame. We have yesterday's price action sitting within this H1 fair value gap. We have price on Asia giving us a low, and then on New York giving us higher low, low, higher low, and then on YM it's low and lower low. That sparked off this entire move. So once again, going back out into the larger time frame, right? All of this Q1 and Q3, right, where they give the SMT is what spark off like big reactions. You can see all this big reaction comes from divergence that is in line with the larger time frame quarterly divergence. So yeah, other times that you can look at is maybe previous years. A lot of trades are playing out on Q2 versus Q3. So if you're studying all of my old live trades, you can see like Q2 and Q3 being like really nice, and then now we're seeing Q1 and Q3. So what I'm anticipating next week for Q3 is some sort of big reaction, either taking out the Q1 low or within the week itself, the Monday and Wednesday giving some sort of pattern. So it does not have to work out 100% of the time. You just have to come in with the market with like pre-bias on what you are trying to look out for. So it can be even be in like the micro cycles where you go into like 90 minutes or even the tiny 1 minute to find all this overlapping confluence. So yeah, that's what I want to share with you guys today. You feel like, oh my god, price is so beautiful. Oh, and right now I just saw something else. Look at this. Q1 over here and Q3, Q1, Q3, right? This is the 90-minute cycle. Isn't she beautiful? Like seriously. The more you can spend time doing this for fun, the more you're going to see, the market play out in your favor because you're just enjoying your time. Ta-da! This is crazy. All right, thanks for watching. See you guys in the next video. All right, so here are the winners for the previous giveaway. Thank you all so much for the comments that you have left. I've read through all of them and I really appreciate you guys for taking the time out to put down some key takeaway lessons. Make sure to do the same for this video as well because I will be doing more giveaways in the upcoming months. Every single month there will be 3 winners. So make sure to participate in all of them. For all the winners, please leave your email down in the comments section below and I will reach out to you with all the necessary details. Hope to see you guys in the next video. Thanks for watching. Bye!